Going to TradeTheNBI.com. This is John's Reporters for the 23rd, and as we approach the Christmas break, Santa rally came just as everyone had begged for it. They waited to the very last minute. Not very functional in a lot of instances, simply because a lot of the early part of these moves were gap ups and then traded from there. So you had some movement, but kind of erratic in spots unless it was the later part of certain days. So like today, the bigger part of the move happened later half the day. And really, once we got above that ABM yellow, something we had talked about the different levels. First it was the 46.13 and then the 46.57, and closing all the way up at 89. So those became significant benchmarks. You can see steel crossing above cyan here on DOC with orange, almost dipping below the red, not quite, but significant enough that justified the push. We'd already seen it with the pivot up of red NBI and the rejection of white NBI moving back, and that was sort of the catalyst that we saw in all previous ES, as well as here on the NQ, which is the NASDAQ. Spike of the magenta over that happened right as we closed right on the 50% line. And then from there, it was just free reign for institutions in that lead line right at that particular spot, is why we've talked about it. And why, when this popped off at the first case, we stated that they would need to get back to there again. This just wasn't enough volume taking place at that point when they had a massive jump day. Just as they can't get enough shares to do what they need to, so they got to bring it back to it to begin to fill up. And pick somewhere probably around that 76% as a mean target place to acquire, and so that would, from a NASDAQ standpoint, 15.8, 15.9 range. Gold, slight pop. That's going to continue to go. The GDP numbers were a little bit better, but of course a lot of that was revision from the previous, and of course mostly based on spending. That's not going to take place in the first quarter of next year, so that'll be an interesting one to see. That gave Euro bounce right back into there. And finally decent readings that it could actually generate a little bit more of a push to break out from the stagnation that's been in that 113 range. Oil is going to continue to rise despite the thoughts of having released the petroleum reserves, things like that. We're all gimmicks. At the end of the day, oil is going to reflect inflation, and regardless of supply and crude buildups, it's going to be an early warning along with gold kind of situation on where inflation is headed, because it always stays ahead of it. Because in the Middle East, they like buying things in both euro and as well as dollars, and they are not going to take a discount on either. Bitcoin, from its standpoint, it had reached that peak, and then we started to see some of the brief sell signals that took place in between. It's still fairly healthy at 49 right there, so it could end the year well above 50, which would be still excellent return from where it began. ETH certainly doing far better than Bitcoin from a return standpoint from where its year began. And it trades a lot more effectively, probably due to the size of the volume that it gets versus Bitcoin, most likely because of its price as well as just functionality. So it certainly moves a little bit better from that aspect. From a 50K standpoint, we saw this building early back here when we were at 23% and proceeded to see magenta well above white and above the 33 level, and it stayed there. A brief moment of a dip to it, but immediate turnaround. That's when we signaled that buy setups would be clean, and sure enough, you can see that with the long algo right there, following it straight to the top. Intraday, we look at it, it was kind of jumbly a little bit early on, but still had that upside bias to it. It was pretty strong, and wasn't looking for a whole lot from any positive extremes that popped up. They started coming in a little bit later in the day. We had one here at the 54, but what seemed more reasonable was the 64 range, right in there, and you can see it's beautiful where you have no challenge of NBI white over red. Nothing's going to happen under this scenario, and it mimics the fact that it's signed under red throughout all of it. It started to change a bit as we started breaking down a little bit more, and you can see that corresponding into the shakeout where we finally dipped below the plus 15, actually a plus 25 level is where the magenta was at for a while. And that's when we got the beautiful DSC spread breakdown. I was looking for a little move to the 64 and then whatever turnaround. Hit the 64 and then actually started to look like it was doing nicely. Ended up with a little head fake pump where they dipped just below it for briefly, despite being in a quite bullish configuration from there. But it clearly became the point when we started to see white, red as a magenta above it, and in this case green breaking above with DSC orange dipping underneath there, shakeout turning around. And even if you waited the bar or two for the EDM being over magenta, the shakeout yellow crossover magenta is the crossover point that we look at. And you can see from that point on, just straight up. Made a brief attempt, popped in one little brief move, but there was no corresponding cross of white above red, and then we had rising gold and azure, and that's going to maintain itself all the way through. So there you have it. Santa Rally worked out perfectly, and not quite at the full highs. That's going to be an interesting benchmark as we get ready to close out the year. I think a lot of people will be looking at that one, just from a forward stance, because it's relevant. As always, though, I will continue to update you on Skype chat. Trade well. I'll talk to you later.